Welcome back everyone. This is a quick video whereby we are going to do a sort of revision of what we discussed on the Wyckoff model. This is the price chart for Sanlam, which is a Johannesburg listed company, and I've pulled the daily chart and I'm just looking at the normal candles. So remember what we spoke about. So we would want to start at this range here, from this point here. So we want to see, we can say that the price entered this range, because if I put the dotted line around this point here, so we can say the share entered this range, we can put it as the 8th of May 2009. And the price was moving up towards this point here. So we can see that at that point the price was 17 rand 86. On the lower side, the price was going towards 16 rand 77. So that's a difference of about 1 rand. So the share was moving around these 2 points, the difference which was only 1 rand. So now when we consider the dates, you would see that this was on the 8th of May. That's the day that it entered this range. So we are saying the price entered the accumulation phase on the 8th of May. Then the point where it broke out of that range was on this date here, which was the 14th of July. So from the 8th of May to the 14th of July, for all those days the price was just dancing around the same zone. Now if you had bought this share hoping that it's going to go up, you might hold maybe throughout the month of May, but by the time you get maybe to mid-June and you see the price coming down to this level of around 16 rand 32, then you might say this is not going anywhere, let me rather maybe sell. But you would have failed to notice that you are just in the accumulation phase. So if you are not looking to accumulate, you would not rather have entered this share or investment idea. But now consider somebody who watches and sees that this is the accumulation phase. Then they wait, and when they see the price open on that day, on the 15th of July, at around 17 rand 70, then that person says, okay, let me buy. It looks like the share is leaving this zone of accumulation. They know that it's now going to the markup phase. Now that person would buy on the 15th of July, and they would have probably tried to sell on this date, which is the 5th of August. Now if you calculate the move from here, that's like 17 rand 70 up to that point there. That is almost 21 rand. So you'd have seen that this person would have held the share for close to 3 months and it didn't go anywhere. It was just moving 1 rand. Then someone comes on the 15th of July and they wait for only about 20 days, and bang, they have made all that money from 17 rand 70 up to 21 rand. So you would have waited like 3 months with your money doing nothing for you, and somebody comes and does it in 20 days, they have made that much money. So it is important to identify this level to say the price is entering the markup phase, because the advances would be rapid over a short period of time. You wouldn't waste time sitting and waiting for it to move. So after it goes there, then the price goes down. And you can see that the price now moves between the range. Now it's moving between, we can say, a range of around this point. That's 19 rand 60. And the upper limit on price, that's about 20 rand 88. Again, that's a range of about 1 rand. And it continues and it tries to advance towards this point, but it still came back within that close range. Then it moves a bit up, but it remained in that range again until it moved out from this range. That was now 23 Rand 30. So you can see that it moved rapidly here. We can see that this was markup phase. Then it went into a sort of a reaccumulation phase. But then it was advancing slowly. So this was from markup, from accumulation to markup, then reaccumulation with slow advance. But then you can see from this point here to that point that it was another markup phase. So this one didn't take the 4 points, it just went from accumulation, markup, then reaccumulation, and markup again. Then it entered another phase here, which looks like this was now the distribution phase. Then it dropped into now the markdown range, but it didn't continue marking down for a while. Then it started moving into another zone, which you could call another reaccumulation zone or redistribution. Then it tried to go up, it went down again. So if you look at the points where the price moves quickly, like for example, if we take this point here, the highest price there was 28 Rand. And this, it was on the 25th of July 2011. And it came all the way down to that point of 24 Rand 19. So from there, from almost 28 Rand to 24 Rand, it moved quickly. This was the 11th of August. There it was the 25th of July. So that's a period of about 20 days. Again, it moved quickly. Then it doesn't move quickly another long time. So this is why you need to understand the Wyckoff model so that you can know what you are buying and what point you are buying. Usually traders are only concerned about the markup and markdown levels because it's those levels where they know they can deploy their money over a short period of time and they would have come out with maybe 10% profit within a period of maybe 2 weeks, like you are seeing here. So they live only for those times where they see that things are about to turn rapidly. Like here, this was the 13th of November up to the 9th of January. But if you look there, it moved from 39 Rand up to that point where it was 47 Rand. So they know that they would have made that 8 Rand per share within that period of just over a month. So you need to think with this in mind as well when approaching your trading or investment. If you're an investor, your target is to buy in the accumulation zone so that you can buy at a lower price. Then when the price moves nicely upwards, you would be sitting and looking at your money grow into a profitable trade. So that is all for now. This was just a look at how the model applies in real time when looking at charts. Thank you.